Good morning, everybody. Hope everybody's doing well. I forgot to add one thing here. Sorry about that. Let me see. I forgot to add our app. And GammaEdge.com. Okay. Hi, Coco. How are you? Every day I'm here. Great. Reminds me of a song. Every day I'm hustling. Good morning, Sasha. Let me know where everybody's checking in from. Great. If you can, or if you want to. If you don't, it's fine. Just wonder where we get people tuning in from. You remembered my reversal from yesterday. Los Angeles, nice. Oh, early in LA. Oh, Voltarian. Oh, goodness. Well, I'm an Ohio State fan, so that's okay. And I'm deep in Vol country, so actually I'm in Vol country, the town of. So. Unless you're a Dogs fan, I don't know. The shoe, that's right. That's right. Absolutely. Just a quick side note. I took my kids to the New Year's Eve game in 25, right when, at Mercedes-Benz. So, and we're up, 2 touchdowns and ended up losing to Georgia, after Marvin Harrison got knocked out of the game. And I mean, of course, I knew we weren't going to make the last field goal there, as the clock struck midnight on New Year's Eve. So that was brutal for my boys, but oh well. We were at the national championship game next year in Mercedes-Benz, so it was awesome. We had a great time. So I love Mercedes-Benz Stadium. I could go watch games there all the time. So food's good. It's cheap. So good morning, bro. All right. Sorry about the side note. It's golf season, so. Oh yeah, that's true. Yeah. That's true. Yeah. All right. Masters is on the horizon, so I'm a huge golf fan. So, all right, let's go ahead and jump right into it. Thanks everybody for joining us this morning. This is Michael coming to you from GammaEdge.com or Gamma Edge. As always, we'll cover our 3-pillar sentiment, structure, and trend. I hope you found all the content yesterday extremely valuable. I tried to lay it out early in the day, and then what we're seeing midday with the reversal down towards 6,700. I reviewed my pre-market prep last night because I watched my video again. Just kind of wanted to make sure that I was conveying, the opportunities and chances we had for some supportive action with our crossover tools, and then moving up yesterday. So if you didn't review that, or you're just joining us this morning, review that content from yesterday. And if we can change anything or add anything, at least to the free content. Obviously, we have extensive content in our Discord for our members in real time as the GE team is in the trenches trading. So, and we can provide, further updates live and talk with our members. But anyway, just review that content. Let me know if there's anything you'd like to see different or change. And same thing with the pre-market prep, if we can change anything to make it better in the short amount of time we have in the morning. So, all right, let's go ahead and jump right into it. Market trend model, again, based on the tick index. Bolded white line is our cumulative tick. Again, rising to the upside yesterday, just with that small downturn early on. And for us here at GE, we like to see the mid-morning or midday reversals. That just gives us greater confidence that buyers are stepping in the overall market instead of just a true gap up and then just a run to the upside. Those midday or mid-morning, midday reversals, once you get the pullback and sell off, and then you see buyers step in, really gives you a confidence of supportive action below you on a level. And then when you see the option structure really starting to change, which I tried to post yesterday, We saw the calls just come in mass, in volume, just really quickly, strike over strike when we reached close to that 6,700 level. So that really gave us the opportunity to capture a significant portion of the upside yesterday, and then we continued to the upside. So again, we're above the momentum moving averages. So again, this our market trend model ignores all the news, ignores all the noise, it ignores the overnight gap downs. Basically, it's just giving you a pure understanding of what is happening in the market of buying versus selling. And then the key takeaway up here is obviously the new lows were outpacing new highs yesterday. The red was above the green. But this filtered cumulative tick, again, this is institutional buying or institutional orders or large block orders. So you have to have significant volume coming in large blocks for this to be turned to the upside. This is really not sensitive to anything else. It's not, because we filter it. So, if you're not having those large block orders come in, most likely from institutions, those are the big boys and girls with significant amount of money, you're not going to see this rise to the upside. And yesterday we saw that slightly below zero, and then we just saw it linear, to the upside. So institutions were stepping in yesterday at those key levels. So could we pull back to those key levels? Absolutely. But it's going to give us a point of reference now for understanding via our market trend model. And then we're above the colored ribbon. The colored ribbon continues to expand to the upside. This is our longer look back period. We continue to put capital to work in this market until our market trend model tells us to quit. We will continue to put capital to work, and it's working out very well so far. Obviously, if you bought the dip yesterday, you are in great shape this morning, right, to either take profit or continue your swing trades. So again, this is unambiguous to us, unemotional. It's just mechanical. We have tags that we've back tested with our partner EdgeRater that shows us the probabilities of further appreciation, and when we get those tags, and we just follow those mechanically in our market trend model channel, and it's posted every morning for our members. So anyway, looks good. Moving to the upside. Again, this could all change. This is not predictive. This is just telling you what is happening in the market at the moment from market participants buying versus selling. Our market trend model and trading view, again, indicating the same thing. This is our weakness. You'll see by the background, our colored background, this is our morning weakness. What key takeaway here for me was we didn't even cross below these momentum moving averages, even the second moving average. If we were having significant selling, we would have cut right through these moving averages and started moving to the downside. We did not see that at all. We actually started seeing this turn red, or it was red, and then started turning green right here, right around 1040. We saw some puts starting to monetize, calls come in at significantly higher strikes, which was interesting. I posted our spec C chart, our P40, or sorry, our C40 and C50 line, which is where the 40 and 50% of market participants are speculating, was significantly above spot price. So that tells us that speculators are coming in hot and heavy and on strikes way above where spot price is. So they were obviously anticipating for a move up. And then we started crossing back above the momentum moving averages. We turned green right around 11:10, 11:15, and then we just continued to the upside. So even if you were not involved early in the morning, this should have started getting you in motion to the long side. And then we started crossing back above the key levels, 6,800, 6,825, 6,850. And then it was was kind of the areas that we laid out. We had that plan, and when we started crossing those areas of if-thens and how we were going to navigate that structure. So, all right, let's move on to the SPXA. Again, monthly expiry here. We are put dominated here. You can see the controlling factor there, at 6,900 overhead. So obviously, if we cross back above 6,900, it will change the picture of the landscape. We're well within the transitions now, so extremely choppy zone, and then to the downside, 6,700. So this has changed some day over day into the March into the monthly expiry, from call dominated to put dominated, obviously, as you would anticipate. But this is also, as the spot price continues to move up and down the structure, we look for where market speculators and participants are speculating at. So we'll continue to watch this day over day. Again, key level below is 6,700. If we're staying above that, we'll continue to have supportive flows via the charm into the monthly expiry. And then for above 6,900, the landscape changes pretty significantly. So that's why we'll continue to watch for that key level overhead to move above. All right, moving on to the SPXP upper quartile, put dominated as you anticipate with the large move down. We had 6,800, again, pretty glaring level there of puts sitting at that level. And those are out of the money puts. As long as we're above that, you'll see the charm there and the gamma. Obviously, the charm will continue to decay if we're above that level, providing supportive type flows. And then you see all of these out of the money puts. As long as we're above this level, above these levels here, these will continue to be supportive and continue to provide supportive flows. Obviously, if we start traversing back below 6,800 and start capturing some more of these out of the money puts become in the money, then obviously the delta gets more negative, obviously, in our book, and the dealer gets more positive, and then they have to sell the hedge, and then we could continue to traverse back down towards that 6,700 level, which you see down here. But as of now, 6,800 really is kind of the line in the sand of staying above, and then you see the wide transition here. We see 6,850 overhead. Again, if we get above that, then we could have the opportunity to move towards top of the transition area at 6,900. So I am anticipating extremely choppy range, again, unless we start traversing above these key levels, and then obviously 6,900. But this could be extremely choppy really for the rest of the week. So we'll continue to watch that day over day. All right, SPXP GEX ratio. This is like a put call ratio, but we add the time component, which is gamma. And this is weighted short dated call versus put gamma. I really spoke about this heavily yesterday in our pre-market prep, that we're reaching an extreme level that will most likely historically we see a bounce from our back testing. And then we saw that bounce, and now we're at actually 1.02, which is a theoretical balance point between calls and puts. So if we're going to continue to see the sustained upside move, we'll need to see this in a positive slope. The GEX ratio, that's indicating that call speculation or short dated call gamma is coming flooding into the structure and complex and overrunning the short dated put gamma. And then you'd want to see this obviously continue with a positive slope to the upside, as we saw up here when we reached kind of a high point of 2.26. So again, that GEX ratio, it can stay pegged at extremes for a significant amount of time if we're in a longer term downtrend. But historically, if we're within a supportive, well-hedged type market, when we reach this 0.5 level, 0.6 level, we'll historically see a bounce in the SPX, which we saw yesterday. So again, this is not predictive of what's going to happen back to the upside, but just letting us know at those extremes that, hey, shorting may not be the best risk reward. And that's kind of where we were at yesterday. Shorting to the downside was not going to be the best risk reward. And now we'll see what happens heading into the rest of the week. Significant improvement in our delta balance. So our delta balance basically is letting us know the option structure and how market participants are positioned below spot price. That's the left-hand plane, the red dotted line, and the green dotted line is the right-hand plane, or what we refer to above spot price. So the right-hand plane is your out-of-the-money call speculation or in-the-money puts, but the left-hand plane is the in-the-money calls below us, as well as the out-of-the-money put speculation to the downside. So obviously that rose significantly, indicating most likely that the out-of-the-money puts were monetized or closed, exposing the in-the-money calls, which were supportive around 6,700, which we talked about. And then now it's actually dragging the delta balance back to the upside as the left-hand plane is starting to take control, and we're back above zero here. Now we'd like to see the right-hand plane start joining the party. That would be your out-of-the-money calls, and then in-the-money puts overhead being monetized or closed as those put holders experience a little bit of fear with spot price appreciating. Key takeaway is this section right here into next week. We see obviously March 6th here is Friday, and then on into next week. Again, weakness into Friday, and then recovery after that into next week. So we'll see if this continues day over day. If this does, that means that we're looking at right-hand plane market speculators coming in for next week, out of the money calls after traversing this downside here in the left-hand plane. Again, this could be some out of the money puts coming in, but we really want to see all of these appreciating to the upside with both slopes going above zero if we're going to have a full move to the upside with significant price appreciation. All right, let's move on to the SPXP net stack command. Again, high sensitivity levels for today. The 6,800 level to the downside. Obviously, we have 6,820 here in the money calls. So we're in the money calls below us, in the money puts overhead, in the money calls winning the battle. So again, this is what we call locked horns. So not necessarily a structure for significant price appreciation. And then obviously you see 6,900 overhead. That's going to be those in money puts there. 6,873. We are in the money puts to out of the money calls. So again, that's going to be the key transition area there. Then the net charm level, obviously you see out of the money calls 6,900. If we're below that, that'll be your headwind. And then out of the money puts 6,800 should continue to be supportive if we're above that, and you see the transition areas there. And then 67, obviously that's going to be significantly below spot price. If we do start traversing the out of the money calls to in the money puts down below us, obviously we'd have to lose 6,800. And then net gamma high sensitivity levels there. You can see those transition areas there. And then net Vanna, understand that we actually have the possibility of a tailwind here. If we see volatility continue to drop, calls come in, we could have the vein of tailwind. Again, if we get above 6,900, then we'll have significant bullish overall back tailwind and structure supporting for a move up, but not really anticipating us to move above 6,900. Looks like that's going to be a significant area to cause some stalling in price. All right, moving on the SPXP0 DTE. Again, you can see that glaring 6,900 overhead that we just spoke about. And that also is a confluence with our COTMC. That's where out of the money calls become in the money. And historically, we see some monetization. You see the transition areas there, 68.05 to 68.30. We were above those at the time of me looking at this, and we're at 68.43. So again, those should continue to be supportive on pullbacks into transition areas. If we're within the transition area, we'd expect this to be extremely choppy. That'll be driven by our intraday call versus put speculation. And that's the content we're posting yesterday, intraday, our volume command, as well as our spec C command. And if we get below the transition 6,800, obviously we'd be a little bit more risk off. But we do have significant charm support, as I just showed, on our net stack command all the way down the structure. So again, we would not anticipate a large collapse in spot price, again, unless we see sentiment structure change or some geopolitical tensions continue to rise or some change there. And even a pullback down towards 67.50 would most likely be supportive here as we see the net delta, net charm, and net gamma actually, the bell-shaped curve there actually starts to drop off pretty significantly down towards that level. So we'd watch that as we traverse down into those areas. But 67.80, we'd anticipate some stabilization there most likely and a bounce off the bottom of Drunken Sailor range. So, all right, I think that is it that I've covered for today. Again, check us out at GameEdge.com. That's our new website. Again, resources here, Freeze newsletter, blog that I posted 2 blog posts yesterday, but extensive education there. Our products, our web app, and everything, and then our pricing tab. Check us out in the Discord. All the 14-day free trial, all the tools turned on, and you can come in and get up to speed very quickly with our members and trading and our G team helping you out. So awesome! Thank you, Voltarian. Really appreciate that. And that's how we expand. Key takeaway is here at GameEdge is we're member driven community. All of our development, we do have a North Star that our developer team is trying to get to via our web app, via our tools. But we're a member-driven community. We listen to the members. If they say they want something and it's within our realm of possibilities and it's fitting within how we want to take GameEdge into the future, then we absolutely look into implementing that. And a lot of our tools have come out of members trading their own accounts or larger accounts and saying, hey, I need this information. You know what I'm saying? I want this presentation of this information. And then we take it to our development team and we meet with these members one-on-one and say, hey, how can we help you become a better trader? Or if you're using it, for some other purpose, how can we help you in development? And that's what we do. And then we develop a lot of our tools and our community out of that. So we'd be happy to join with anybody listening to come in, let us know how we can help you. If you're looking for specific tools or specific data related to SPX option structure, we'd be happy to do that. So also on the horizon, I'll just let this out. We're looking at developing an API. So if anybody's interested in that, we'd be happy to take feedback, not in the technical point, but how you would use an API with the data and what kind of data you would like in that pipeline of the API. So we're working with multiple people to get that GameEdge API up and running. So hopefully people will be able to tap into that. So, all right, let me know if anybody wants to go into any individual equities. I can cover those. If not, we can just wrap it up this morning and look for some content during the day, depending on how our availability of our GE team is. But let me know if anybody wants to go over anything individually. So I'll hang out for another minute here. Tesla, yeah. Google, NVIDIA, sure. We'll take a look at those. Tesla had looks like it's having a nice bounce this morning. Actually, I didn't look at it this morning, but so upper quartile on Tesla via our web app here. Obviously, let's look at March expiry first. So March call dominated. So I actually reviewed Tesla yesterday and said it. Oh, well, Hood, I would take a look. Tesla, the structure, there's a few stocks. The structure was actually still looking very productive on the pullback, and Tesla was one of those. So Tesla continues to still be call dominated, supportive on pullbacks. 415 to the upside looks good. So if the market starts to turn around, Tesla is going to be one of the first stocks that I would look to for movement to the upside. Upper quartile, call dominated, 410, probably a large level there, 400. If we get above 400, you're still within transition, but 410 to the upside. And then obviously you see speculation all the way up. So Tesla still looks great on from an option structure standpoint. So let me take Hood there. Saw a shank through that in there. Hood's call dominated. Let's look at Friday's expiry. Call dominated. Hood still looks good. 80 to the upside. So spot price is sitting right there at that PGX level. Let's look after this Friday. Structure moves up to 88 there. You see that advancement in PGX. So PGX looks good there as moving up in COI. So Hood looks good for price appreciation as long as the market, again, continues to cooperate. So, all right. Coco, I don't know if SQQQ has enough OI. Our OI cutoff is 100,000, but I'll look at it. The better thing would be to look at QQQ and as a proxy, obviously, and how market participants are positioning. And if QQQ, if the structure is put dominated and bearish, then obviously you're going to take SQQ, right, as the proxy to the downside. Google is call dominated. Structure looks good on Google still. Upper quartile, 310, 312, and actually Google PGX and CY advances to 345 on the upper quartile. So Google continues to look good. So this is a theme I'm seeing actually across a lot of these Mag 7 stocks is the structure continues to look good, and we're not seeing significant bearishness in the Mag 7 stocks, even with the pullback. And I think that's why you're seeing the SPX not be significantly pushed to the downside. So NVIDIA call dominated, 18750 looks good, upper quartile, 190. And this is what we do here at GE. We look at the structure of the Mag 7 stocks. We actually have automated things running for most of the Mag 7 stocks. And then we have scans that let us know when these stocks are transitioning from a bullish state to a bearish state, or call dominated to put dominated, or the Greeks are transitioning to call dominated. And a lot of these have not transitioned to put dominated across the Greeks. So that was also another kind of indicating factor for us that we weren't sure that we were going to see significant move down in SPX because of the weighting. Now, this could all change day over day. The structure could continue to change, option structure. But right now, the Mag 7 stocks are still looking fairly good. So, and that is also the other caveat is if they start looking bad, obviously because of the weighting, the SPX is most likely going to move down. So, all right. So Friday's expiry, put dominated on QQQ. Yeah. So 607 to the upside, 600, 601 will continue to be supportive. I hammered that 600, 601 yesterday. And so 607 to the upside, I think you're probably going to see a cap on price around there. Unless you get above that, but not really anticipating that. So if you're playing SQQ, I guess if you see a failure around 607, again, not financial advice, you could see the pullback down towards, I don't know, 600, 601 again, if that's what you're looking for. But we're within the transition area now, so this is going to be extremely choppy. Okay. All right. Yep, absolutely. All right. Thanks, everybody, for joining us. Appreciate it. Like and subscribe on X and YouTube. You'll be notified when we go live. GameEdge.com. Check us out there. And everybody make it a great day. Manage risk as always. I think the key takeaway today is it could be extremely choppy within this overall DS range as we head into today in transition area. That's going to be my thesis. I know we're above the transition area. 68, 50, and 55 is going to be the key level to get over. If we see a rejection there, probably pull back down into transition. If we get above 55, 75 is the area I'd look for, and then obviously 6,900. But again, if you capture that price appreciation up towards 6,900, I'd probably look for some major stalling into that overhead area. So, all right. Okay, thanks, everybody. Make it a great day. We'll see you later.